Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate jargon. Today we're diving into a filing that promises some excitement. I mean, who wouldn't be thrilled about index rotations and low volatility ETFs? Okay, maybe just us, but stick around, there's actually some interesting stuff in here. We're looking at a semi-annual shareholder report from THOR Financial Technologies Trust, specifically covering the period ending February 28, 2025. These reports are like progress reports for investment companies telling shareholders how their money is being managed. Let's jump in and see how things are going. Join our Discord channel in the description for more discussions. First up, we've got the THOR Index Rotation ETF, ticker symbol SEER. This fund's semi-annual report tells us how it performed from its launch on September 23, 2024 through February 28, 2025. Let's see if it lived up to its name. Before we get to the performance, let's talk cost. For every $10,000 invested, this fund charges about $28, which is 0.555% annually. That's the cost of doing business, basically the fund's management fees and operating expenses, translated into easy to understand terms for every investor. So how did THOR actually do? Well, since its launch, it delivered a total return of 3.11, 3.15, 3 minutes in S&P 500 index. A common benchmark returned 4.422% during the same time. They also distributed a dividend of about 8 cents per share in December, which equals to a yield of 0.28%. A dividend is when companies share a portion of their earnings with shareholders, and a yield is how much income you get back based on what you paid. This is like a small thank you from the fund to its investors. To give you a clearer picture, imagine you invested $10,000 when first started. By the end of February 2025, that investment would have grown to about $10,353. While it sounds like great news, keep in mind the S&P 500 would have turned into $10,471 for 1,000. Looking at average annual total returns, there is at 3.53% since its start, while the S&P 500 is at 4.71%. Remember, past performance isn't a guarantee of future results. It's just a snapshot of what's already happened, and things can change quickly in the market. The fund's net assets, which is essentially what the fund owns minus what it owes, is about $35 million. It holds just two investments, and its portfolio turnover, or how often the fund changes its investments, is 110%. The fund's two main investments are Invesco QQQ Trust Series 1 and SPDR S&P 500 ETF Trust. Basically, the fund invests in these other funds to achieve its investment goals. QQQ accounts for around 49% of the investments, while SPDR is at 50%. Now let's switch gears to the THOR Equal Weight Low Volatility ETF with ticker symbol THLV. This fund aims to provide investment results that correspond to the TR Equal Weight Low Volatility Index. Just like the THOR also has costs. For every $10,000 invested, you're looking at about $27 in expenses, also about 0.55% annually. LV has delivered a total return of 17.91% since starting on September 12, 2022. By the end of February 2025, its closing NV was $27, and they are happy about this, but are honest to note the S&P 500 did far better with 57.112%. In December, the LV distributed about 35 cents per share, a yield of 1.28%. Think of that as a little extra cash for investors. If you invested $10,000 at the beginning, you'd have about $11,411 now. In comparison, the S&P 500 index would have grown to around $15,041. Looking at the average annual total returns, it is important to keep in mind that the S&P had a very strong performance. Taftovov as to ADHP has been outperformed, also mentions their 6-month and 1-year returns to further emphasize that the S&P has been outperforming it. This fund is doing better in terms of size. Its net assets are about $91 million. It has 3 holdings and its portfolio turnover is 214%. The fund's 3 main investments are the Technology Select Sector SPDR Fund, the Energy Select Sector SPDR Fund, and the SPDR Bloomberg 1 3-month T-bill ETF. Those investments roughly correspond to equity and fixed income. The ETF with the highest holding is the SPDR Bloomberg at around 60%. Taking a quick look at the schedules of investments, we can see exactly what these funds are holding. For the THOR equal weight low volatility ETF, the biggest holding is the SPDR Bloomberg 13-month T-bill ETF with over $54 million invested. And for the THOR index rotation ETF, the two big holdings are the Invesco QQQ Trust Series 1 and SPDR S&P 500 ETF, showing where the fund's assets are allocated. These statements give us a snapshot of what the funds own and owe. You can see the total assets, liabilities, and the net asset value, which is essentially the value of each share. Looking at the statement of operations, we can see the fund's income and expenses. For example, the THOR equal weight low volatility ETF had investment advisory fees of over $226,000. Moving to the statements of changes in net assets, this shows how the fund's net assets have increased or decreased over time. You can see the impact of investment income, distributions, and share transactions. These highlights give you a quick overview of the fund's performance on a per share basis. You can see the net asset value at the beginning and end of the period, as well as key ratios like the expense ratio and portfolio turnover rate. These notes provide some background on the fund, such as its legal structure and investment objectives. These notes explain how the fund values its investments and prepares its financial statements. This section provides details on the fund's buying and selling activity during a period. This section describes the fees the fund pays to its investment advisor and other service providers. This section provides information on the fund's distributions to shareholders and the tax components of capital. This section describes the fund share transactions such as creations and redemptions. This section outlines the key risks associated with investing in the fund. Wrapping up, the fund confirms that there were no changes in or disagreements with accountants during the period, which is always good to hear. Now, what does all this mean? Well, it seems like THOR Financial Technologies is running these ETFs in a pretty straightforward way. The fees are reasonable and the performance is, well, mixed. THOR is still new, so it's hard to judge, but CLV is underperforming the S&P 500, which is something to keep an eye on. One notable risk, as mentioned in the report, is the reliance on models and data. If those models aren't accurate, the funds could struggle. It's a reminder that even the most sophisticated investment strategies aren't foolproof. Overall, these ETFs seem to be doing okay, but they're not exactly knocking it out of the park. It really boils down to whether you believe in their specific investment strategies and are comfortable with the risks involved. Alright, that's our decoder for this semi-annual report. Now, I'm curious, what's your take on these THOR ETFs? Do you think they're a good investment, or are there better options out there? Let me know in the comments, and don't forget to like this video if you found it helpful. Subscribe for more deep dives into the world of corporate finance, and make sure to join the Discord community for even more discussion. Thanks for watching, and I'll see you in the next video.